There are so many life insurance policies out there, it can be confusing. So what's the difference between term and permanent life insurance? Dave Evans from Evans Financial Group is here to explain. Thank you so much for being here today.
Thank you.
So what is the difference between permanent and term life insurance?
Okay, the term is typically purchased for a period of time, like 10 years or 20 years or 30 years. It's characterized by having a relatively low premium and does not accrue any cash value, but it's in force during that time period, that 10 years, as long as you pay the premium. If you pass away, then the beneficiary gets the death benefit. And it's like renting. Okay, your car insurance is kind of like that. You know, if you don't have an accident, you don't get anything back. You just you rented your car insurance for the year. Permanent insurance, on the other hand, is permanent in nature, meaning it's going to last your entire life as long as you pay the premiums. When I came into business many years ago, we looked at our mainstay of permanent insurance was called whole life, which you paid for your whole life premiums, and you're insured for your whole life. So, and that's characterized by two major things. One is it has cash value that's included in it. Now, I'm going to equate that to, or make a comparison to, like owning a home, where notwithstanding interest payments, the monies that you pay into your mortgage payment go to build up equity, and that's what happens in permanent insurance. You build up equity in that policy, and at some point in time in the future, you can get your money back if you don't need the policy anymore. You can get it more than your money back, and it can supplement investments and or bank savings types accounts. So whichever one is right I'm going to say is the kind that's going to be enforced when you die. If you can tell me when you're going to die, that would be helpful to me to recommend.
Right.
But it depends on the individual situation. Sometimes term insurance is purchased to cover a large financial obligation. Sometimes young families will buy that when the main breadwinner needs to be insured for a large amount of money but doesn't have a lot of premium in the budget. So that would be a place for term insurance. On the other hand, as life progresses, if you said, I want to make sure that I have some insurance in force past that 10, 20, or 30 years, then permanent insurance would be the key. That's more expensive, but again, you're paying you're insured for your entire life, and you're accruing cash in the accumulation process.
Okay, and is there a certain amount that you need to be insured for, or does it just kind of vary on each person?
There's lots of different ways of calculating it. Usually we say, what do you want done if something happens to you? Do you want your mortgage paid off? Do you want the college fund paid for the kids? Do you want your surviving spouse to have an income stream to replace the income that you were losing? And we put all those things together and kind of come up with a number, and then we either kind of come up with a combination or one or the other, whichever fits the budgetary constraints at the time.
Okay, awesome. Well, thank you so much for breaking that down and being here with us today.
I appreciate it.
For more information, head over to our website, ktbs.com.